Hi guys, this is Phil with Laptop Trader Channel. Here's my email contact. Caution, most stock traders lose money. Please protect yourself at all times, okay? It's going to be a quick update to the August monthly video. Just a quick topic on relative strength and how to enter a strong stock on a breakout or a consolidation, or how to get on board the train. I'll give you guys an example of a stock that I feel is showing some positive signs, relative strength to the market, and just had a nice reaction to earnings. So I'm going to go to a few live charts for you and then come back to this presentation to show you some charts that I notated. So these are all weekly charts. We're only going to look at 12 charts real quick. This will be no more than a 10-minute video. But this is the overall market, the SPY ETF, right? Uptrend. In the last 3 or 4 weeks, slowing momentum, large red candle, and then a red candle closing towards the bottom of the previous candle at this moving average, still in the uptrend. So, but recently, most markets have been selling off a little bit. So that's kind of our context, right? Ditto on the NASDAQ ETF, actually a little bit weaker than the SPY ETF, closing below the first moving average on my weekly chart. But again, still on an uptrend, very strong uptrend. Then we'll look at these others to compare so we get an idea of relative strength. This ETF is showing no strength whatsoever. It's basically in just a sideways trend or sideways range, not following the market up. So that'd be a case of more relative weakness, or just not participating in the overall market uptrend. Then we see Upwork had a downtrend into a sideways trend, then recently had a close up range expansion bar over several months of resistance, okay? Then we've got the small cap ETF, kind of follows the market. Recently, same deal. This had a sell-off over the past 2-3 weeks. Actually not as weak as the major markets, so small caps showing a little bit of relative strength. But again, following the market down over the past several weeks in a sideways trend, sideways range recently over the past year. Then we got Solo, kind of more like a stage one indifference, just not very large candles. And we've got PayPal, still in this kind of sideways range, having very poor reactions to earnings reports over the past 4 or 5 earnings seasons. So not reacting very well to earnings, sideways trend, relative weakness to the market over the same period of time. Joann, a retail stock, still in a downtrend. So while the markets are moving up, some companies or stocks or ETFs are going sideways. Joann is still in a downtrend. So that'd be relative weakness. Grove, just a sideways stage one, almost indifference. So that's just a watch. eBay, similar looking chart to PayPal, sideways range over the last year or so, after the big sell-off, after the bear market. So we're just kind of in a range. Again, selling off over the past 3 or 4 weeks. So this one kind of follows the market. Just hasn't followed the market up. That's what's disappointing about eBay. This is the former Bed Bath & Beyond company that could turn around or could just fall off the charts totally, but in a stage one. We'll see what happens with that. Finally, Aurora Cannabis, ACB, stage one sideways trend. So out of these 12, out of these 10 plus the 2 market charts, the one I identified as a possible opportunity this week or this month is this chart right here, Upwork. Okay. Again, that's a 3-year weekly chart. And then the 3-year daily chart here shows some bullish price action over the last week or so. So now I'm going to go back to the presentation. I'll show you what I highlighted and notated for you guys on this presentation. So again, here's the weekly chart as I see it. No question it was in a stage 1 consolidation. And then over the past 12 weeks, the consolidation really went flat, sideways. We had a few weeks of volume increases. As you can see on the bottom there is the volume profile. And then we had a positive reaction to earnings, greater than average volume, probably 2 or 3 times average volume. We had a large range green igniting green candle range expansion bar. And then the next week, we had a bar that was an inside bar inside of that igniting bar. And so what I'm seeing here is prices right now at close the week at 1433. When I look to the left, the next major pivot is this previous earnings report here. So about a $24 target on a $14 stock. So I'm looking for a decent move. I'm looking for about a $10 move in this stock. Over the next several weeks, I just drew a few candles here for you guys to see what I would be kind of expecting or looking for. Maybe a sideways consolidation over the next month or so, a couple weeks, and then another move up is what I'm looking for. Now this is the context. This is the weekly chart. So let's go to the daily chart to kind of show you where I would consider entering this stock. So I gave you the context of the market. I showed you relative strength. And this is the context of this individual company, showing bullish price action. Okay. And here, now this is a 3-month daily chart. I've just made some notes on it for myself and for you guys. So you can get an idea of when a stock is beginning to move out of consolidation or out of a stage 1 after a big sell-off and has recently had a good earnings report and a positive reaction to earnings. So where do we get in at? Where could we get it at? Well, I've been in this stock since June. I added to my position here in July, and this is the same stock that I sold a $10 covered call on and a $12.50 covered call on. So I'm actually hoping to get it called away at least on one of those calls, take the profits, and then consider selling another covered call or just buying some shares after August 18th. So I'm already in this company anyway. I really can't add right now myself because that would be against my trading rules. That would go, I would have too large of a position for my account. But here I entered on the screen range expansion bar where it went over the previous bars to the left. We then had a consolidation, right, with small candles, small volume over the next about 3 weeks. Then we had another green range expansion bar, which closed over everything to the left. We then had another consolidation, which was higher than this area over the next, 3 weeks or so. Then we had earnings. So I chose to buy back here and hold into earnings. That's a choice you would have to make for yourself. You don't have to do that. Then we had an earnings day, which didn't really do much. And then the very next day, we had a reaction to those earnings. We had a major volume spike, we got a gap up and a close up with the green range expansion bar. So positive reaction to the earnings. We then had over the next 6 days a consolidation in about the top third of that bar. That's bullish price action. And then what I drew on here is kind of what I would expect to see over the next week or two. And, don't be surprised if this just continues to consolidate. It could move a little bit lower. It could drift lower. It could drift a little bit higher. But eventually what I want to see is this right here. Another breakout, another range expansion bar. So there's two ways that you could get into this stock if you chose to do so. First, which would be my preference, would be to buy the next breakout using a limit order for your share size, your appropriate share size. So let's say it broke out at 1450 and you put your stop under here at, I don't know, let's say 1375. So you'd have a 75-cent stop. So you just share size appropriately for your risk, your tolerance, your account size, right? And then you would just share size for that, a limit order above 1450, enter with your broker, and then you could try to catch the next move up. Because that's my expectation. This is a continuation pattern. It should continue higher at some point. We just don't know when as traders. Or you could take a little bit different approach, which would be to start buying this consolidation, okay, over the next days or weeks. And you could just simply start accumulating shares daily, right? Expecting this consolidation to continue. Let's say per your trading plan, you could afford 10 shares of this company or 100 shares, whatever. And you think it's going to consolidate for another week or two or whatever. And you want to try to catch that breakout before it breaks out. Well, you could do that. You can just buy a share Monday, buy another share Tuesday, buy a share Wednesday, buy another share Thursday, buy a share Friday. So by the end of next week, you'd have 5 shares with basically the kind of that average price around 1433. And if I was going to do that, I would either not use a stop or I'd place my stop under here, maybe somewhere around, I don't know, 1325 or 1350 or whatever that candle is. And then when it breaks out, then you could raise your stop to 1375 or 14 bucks or whatever and have a position going in to the next expected move. So that's kind of two ways I would play that stock. Again, Upwork, symbol UPWK. Close the week at 1433, showing bullish price action on the daily chart, showing bullish price action on the weekly chart, and showing relative strength to the market. Okay, that's all I have for you guys this week, and that will be just an update for kind of a supplement to our August training video. And I will see you guys on the first week in September. Thank you for watching, subscribing, liking, and sharing. Again, this is Phil, Laptop Trader, and we'll see you in September. Bye, guys. Take care.